Hi guys, welcome to another part of the masterclass. In this video, I'll be sharing with you some strategy you can use as a smart money trader to take your trade in the market. I believe by now you guys already understand what we meant by the order block, how to identify a order block. Then you know of the break of structure whenever the market breaks structure. So for this strategy, we'll be making use of two time frames. That is combination of time frames. I will make it simple for you guys. So we are only using two time frame. One is the higher time frame and the second one is the smaller time frame. On the higher time frame, you identify your point of interest, which is your order block. Then on the smaller time frame, you look for entry. So you are using the 4 hours time frame for the order block for the point of interest, then you'll be using 15 minutes for your entry. And if you are using 15 minutes for your higher time frame, then you'll be using 1 minute for your entry. So if you are using daily time frame, then you'll be using 1 hour for your entry. So that's it, guys. But mostly I make use of the 4 hours and 15 minutes. So what do you have to do? The first strategy goes like this. You make use, remember I told you guys what moves the market is the liquidity. So if there's no liquidity grab, you don't need to take the trade because definitely you'll be the liquidity. If you cannot spot the liquidity, then you are going to be the liquidity. So we'll be making use of the trend line liquidity for this strategy. You're having something like this on a downtrend. So let me just try do it properly. Break of structure, then probably something like this. It broke out the trend line, then it came back inside the trend line and break the structure. So what is this? As you can see, the liquidity here has been taken already. So this is a break of structure. Okay, don't really need all this. So let's just say this is what you need. The liquidity was grabbed here. As you can see, the market is supposed to respect this trend line, but instead it broke out, taking liquidity, then it came back to break structure. So this is the structure you need, guys. So here you are going to spot your point of interest. At this point, you are going to spot your point of interest, which is your order block. So what do? You wait for the market to come back here. So when the market comes back here, this is called mitigation. Sorry, guys. So the market comes back to your order block. At times, the market is going to form something like this before getting to your order block. So when you spot the price getting to your order block, so what do? You don't take the entry directly. You move. So what you do next is, at this point, you are still on your 4-hour time frame. So you move down to your smaller time frame, which is probably your 15 minutes. Then you see something like this. The mitigation is going to look like this. Like this. So what do you wait for? You wait for a change of character. A change of character, then back to your entry. This is on the 15-minute time frame. So you take your entry right at this point. So you are going on the 15-minute time frame. At this point, you are going to see another order block after the change of character here. Don't forget the previous one, this is for the 4 hours time frame and this is for the 15 minutes. So you switch to the 15 minutes. So this is going to be the break of structure here. And this is going to be your change of character. Then at this point, you look out for something here before you enter here. At times, the market might present to you again inducements before going back to your entry. This is your entry at your order block here. So you enter here and you take the entry down to your low. So it is going to be something like this. So you target the last low here. This low will be your target. Your stop loss above, then you target the low. As simple as that, guys. You can play this video again so that you can get it clear. Remember, I told you this is going to be the inducements. Inducements or liquidity can be here, but there is another entry, guys. Another entry you can use to enter without waiting for inducement or liquidity. Watch this. This is your order block on the 15 minutes, and the mitigation comes this way, forming highs, low, highs, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. But at this point, the higher high formed, clearing the liquidity of the previous high. Can you see? It cleared it something like this before changing character. So what is the difference between this and this? As you can see, this cleared the liquidity already. It has cleared the liquidity already, and you can see it is not much. Probably you have the wick here, but here you are going to have the full body because this is long. The break of structure is very long, so you are going to have the full body. Here you need to wait for inducement or liquidity at this point before you take your entry, or else you might be used as liquidity. But here, as you can see here, it already cleared the high, the previous high, with a wick, not a full body. So here you don't need to wait for inducement. You can have your entry right here. You draw your order block on the 15 minutes. Okay, you're on the 15 minutes already. You draw your order block here and you take your entry directly. Why? Because the liquidity has been grabbed already. Remember, I told you no liquidity grab, no entry. So then you target your low. Can you see the difference between the two entry? The first entry, you wait for inducement or liquidity grab. Why? Because the last break of structure before the change of character, it broke the structure with a full candle. But here, it broke the structure here with just a wick, and it changed the character here. Then you take your entry directly without waiting for inducement, because the inducement has been taken already. So that's it, guys. Let me see if I can see any example here to show you guys. Okay, guys, just term this as the first strategy. So this is our first strategy, and I'm going to send some charts to the group so that you can see how it works. And in future, when something like that occur, we are going to analyze together. So I hope you guys understand how the strategy works now. All right, guys. See you in the next class. Have a nice day. Bye.